This is the briefing for Friday, August 30th. Monday, as I'm sure you realize, is a holiday and the markets will be closed on Monday. But Tuesday is going to be a very important day in the stock indices. Now, today we closed out trading for the month of August. And typically volume is lighter in August as most people are away taking vacations and finishing up their summer trips. For the last 10 days, we've been in an area of rotation. And this is the spiders on a daily basis. And you can see this. This is about 10 days of trading, 2 weeks of trading. We've been in an area of rotation with the lower extreme right at the 556 area and the upper extreme at the 565 area. Now, you can see that we've tested the upper and lower extremes for each of these days. Now, today it was very interesting. Right at the end of the day, we got a lot of buying that came in and drove the spiders up to really test this 565 area. So now the question is, are we going to see a breakout to the upside? This is the all-time high in the spiders, and we're testing that all-time high. Now, certainly we have a double top also, but it's not a double top until we see some type of decline, which is yet to be seen. Now, looking at what's happening with the internals, you can see that volume is expanding, it's beginning to expand, so it's supporting this move into testing this upper extreme. 52-week highs minus 52-week lows is very nicely positive, and it appears to be expanding also. Breadth is somewhat to be yet determined. You can see the divergence that we have in breadth here, and even in today's trading as opposed to yesterday, breadth is lower in terms of the NYSE breadth. Now, looking at the Qs, where you can see basically a little bit different. There's an intermarket divergence. We're not testing the upper extreme or the all-time high. We have an upper extreme right around the 489 area, 488 to 489. We have support that comes in right around 470, and that's going to be, and I need to move this down to the 470 area. So that's going to be lower support, and you can see the Qs are kind of lingering right around this lower area where we have this area of rotation here. But if they follow with the spiders, we're likely to see the potential on Monday for some type of move back to retest this upper extreme at the 488 area. Volume falling off in the Qs today, so it's very, very interesting. This intermarket divergence and internal divergence between the NYSE, the S&P 500, and the NASDAQ. Now the Russell, you can see, is still in an area of rotation here. The Russell is really, as I discussed in last night's briefing, is really an anomaly. I mean, you can see that the gaps, and you can see the buying tails and selling tails that all occurred. Even yesterday's trading, there was a selling tail and then a buying tail that came in. And then even in today's trading, you see it's an inside day, which means that all of the price range was within the range of the previous day's trading, which typically suggests some type of tightening in the market and the potential for a breakout. So basically, for Tuesday's trading, we certainly want to watch and look for what happens above today's high, because if we see the spiders of the S&P breaking out to the upside, you want to see volume increasing, you want to see 52-week highs minus 52-week lows increasing, and breadth needs to begin to expand as well. So that's going to be critical. And the same thing with the NASDAQ and the Qs. We want to see this rotation back up to test this 490 area. Now, alternatively, if we trade through 470 in the NASDAQ and the Qs, and we trade through this 556 area in the spiders, then that's going to suggest a potential for a rotation back down to test 540 in the spiders, which is the next level of support. And the next level of support in the Qs is at the 550 area. So that's going to be very, very important. Now, interestingly enough, the internals appear to be strengthening to support the potential for a breakout. And here's what's happening in terms of the percentage of stocks above the 50-day moving average and the 200-day moving average. This is for the S&P 500. So you can see the expansion that's occurred. Now, I want to show you what's happening here. This is the decline that we had recently. look at what's happening with the 50 percentage of stocks above the 50-day moving average as I move my cursor down and follow price lower. So you can see what was happening. The percentage of stocks above the 50-day moving average was increasing, not decreasing. And then you can see as we come up here, you can see that it really expanded and expanded pretty dramatically. We were in a downtrend, which basically, and I covered this in briefings going all the way back into January and February of this year, that it was simply impossible for a market to continue to move higher when you have the percentage of stocks above their 50 and 200-day moving averages that are trending lower. And you can see that trend down here and what was happening with price here, which led to this correction that we just came out of a couple weeks ago. This is the percentage of stocks above 200-day moving average. You can see how it has expanded above the downtrend that occurred previously. So it does appear that we have the internals that are strengthening. This is the NASDAQ percentage of stocks above the 50-day moving average and percent above the 200-day moving average. So you can see NASDAQ not looking quite as strong, but still positive. And in terms of the Russell, the 50-day moving percentage of stocks above the 50-day moving average is certainly positive above this downtrend that we experienced, and the percentage of stocks above the 200-day moving average is doing the same thing. So basically, it's going to be a very interesting week next week. Especially, I'm a little reticent to be really excited about a breakout to the upside, mainly because this move here happened basically in the last 10 minutes of trading. And it appeared that we were going to break early in the day, that we were going to break this 555 area, 556 area, because we tested that, then came back, spent most of the day rotating right in the middle of the range. And then we, in the last 10 minutes, that's when the buying came in and took price higher. And you can see that right through here. This is most of today's trading. This is a 60-minute chart. And then, of course, in the last 10 minutes, where we got this move here that came up and tested this 564 area. You can see the divergence in the intermarket divergence. This is the spiders. This is the Qs. You can see the downtrend here. And then, of course, the Russell is just kind of doing its own thing with an upper extreme of 222 and a lower extreme. These are shorter term key reference areas, shorter term support and resistance levels. Have a great weekend, and I'll pick this back up on Tuesday for subscribers.